Hi guys, I hope everyone's doing good. In today's video, I want to chat to you guys about the RSI, so the Relative Strength Index. So a number of you guys have been emailing me asking if I can do a video tutorial on how to use the RSI, how to find profitable setups with the RSI, and also how to use the RSI to get in and get out of trades. So in today's video, I'm going to address those things through a thorough, comprehensive video on how to use the RSI well, how I use the RSI to find profitable trade setups, and also how I use the RSI to get me out of possibly bad trades. But before I get into today's video, check this out. This video is brought to you by Weibo. If you'd like to get 2 free stocks valued at $1,850, check the link in my description box below. Welcome back to Investor Prime TV. David here. If you're new, this channel is a one-stop shop for anything investment. So investment ideas, investment discussions, stock picks, when to get in the market, when to get out. So make sure you guys go ahead and subscribe, and of course hit that notification bell so you don't miss any further uploads. With that being said, let's get this bread. Just any chart on TradingView. So right now we're on the currency pair euro US dollar. So this is if you're a forex trader, etc. But the currency or the security doesn't really matter. What matters is the RSI and how you use them. And that's the great thing about the RSI, is that RSI can be used across the board. Basically, you can use it on stocks, you can use it on currencies, you can use it on commodities. Anything you're trading, you can use the RSI. So to get the RSI, if you're using TradingView, you go to the FX indicators. So this is effectively your indicators and strategies. So what you do is you just type in RSI. So because of the nature of TradingView, it allows professionals or programmers, etc., to actually program their own indicators, etc. So TradingView is actually very good for that. If you don't want to use conventional indicators and you want to use maybe indicators that people have programmed, maybe they're more tailored towards your strategy. Okay, so we'll go into just the conventional RSI, so the relative strength index. So once you plot the RSI, this is effectively what you get with the RSI. The dotted lines indicate the overbought and oversold. So the overbought value is 70 on the RSI and the oversold value is 30. So to summarize with the RSI, if the share price or currency price or whatever security you're trading, if the price of that security or the value of the RSI for that security is above 70, then this indicates that that security is overbought. And what is realistic to expect is that the price of that security is going to drop, and vice versa. If the RSI value is below 30 or 30 and below, then you can see the security or the price of the security as oversold. So you can sort of start realistically expecting that the value of that security is going to rise. This is a good example where the value of the euro against the dollar dropped. It fell, it continued falling until it was oversold. It stayed in oversold territory for a couple of sessions, and then it rose. And it effectively rose to the point of overbought, and then it stayed there for a couple of sessions and then just kept falling. So the market, no matter which market you're in, the stock market, the currency market, wherever market, they go in cycles. The price of that security tends to go in cycles, and the RSI is very good at detecting which part of the cycle the price is in. If you have a look at a stock, so let's have a look at a favorite of everyone's. Okay, let's have a look at Tesla. So as you can see on the 16th of March, the share price of Tesla effectively dropped to below 30, and then it stayed below 30 for a couple of sessions or a couple of days, at which case the share price started to rise and effectively got towards overbought territory. However, using the RSI on its own has its limitations. For instance, just because the value of the RSI gets to, let's say, 70 or above, doesn't mean that the price of that security is just going to plummet and you can expect it to just get towards 30 and vice versa. Just because the share price or the price of the security is below 30 doesn't mean it's just going to take off to the moon. Okay, there are limitations of the RSI, and those limitations come with the strength of the trend, because the trend can be very strong, i.e. it could get to 70 and the trend could effectively just dip a little bit and continue going. So you can have a continuation pattern. However, if you wanted to use the RSI on its own and get highly accurate predictions of where the stock market is going, or actually when the trend is coming to an end, one trend is coming to an end and another trend is picking up, there's a technique that's one of my favorite techniques, and this is RSI divergence. So RSI divergence is effectively where the share price makes a new low or makes a new high, but the RSI doesn't. All right, so if we continue looking at Tesla, and this is a perfect example of what I'm talking about with RSI divergence. So as we can see, the share price of Tesla, basically December 2019, effectively rose to a new high, about $190. Okay, and then the market dipped and the bulls continued driving the price up. So effectively the same high as before. However, if we will have a look at the RSI, so when the share price made the new high on the 4th of February 2020, the RSI made the new high as well. So the RSI's value was at 93, which is extremely high. Okay, so when the market dipped, so it dipped to below 70, when the market rose and made the same high, or roughly the same high at $190 on the 19th of February, look at the RSI. The RSI value was only 77. Okay, so this is RSI divergence. So what tends to happen is that the bullish momentum is effectively a dead thing. Okay, there's not much momentum to drive the price even further. And what happened after that is the bear stepped in and pushed the price right down. And what makes the RSI so good is it's a self-fulfilling prophecy, in the sense that if you're looking at the RSI, then there's millions of other people who are using the RSI and looking at the same data as you are, because the RSI is one of the most popular, if not the most popular, technical indicator that's used for trading. As what you're seeing, there's millions of other people seeing the same thing. Okay, so what happens is there's a lot of people that see the share price is overbought. Okay, so a lot of short sellers at this point will start trying to step in, as you can see with the red candles, etc., dotted all over the chart. But the bullish momentum was too strong. Okay, so it kept the trend going up. So what happens is short sellers or a lot of bearish traders are seeing that, you know what, this is overbought. Even traders who are long and they just want to get their profits, okay, they're saying, you know what, this is overbought. This is a good time to take my profits. So you've got a combination of people taking the profits and also short sellers and etc. in the market. So what happens is everyone sees this RSI divergence. They see that, look, the momentum is not the same. So to have a look at the opposite, whereas you're looking to get in on a possible bullish trend, okay, and you want to use the RSI divergence to help you get in. As you can see, the share price of NIO effectively dropped. Okay, so guys, this was in 2020 when NIO share price was $5. NIO was still a penny stock. Okay, but anyway, so if we have a look, the share price of NIO effectively dropped. Okay, and dropped to a new low. The new low being $2. As you can see, the RSI effectively made the low of 25 or 26. So the share price then rose, and then the share price dropped to roughly the same low of $2. But look at the RSI. So the RSI value went from 26 to 33. So effectively there was some RSI divergence. And from there the share price took off and didn't look back. Although the RSI divergence and the RSI as a tool, they're very accurate in predicting when a trend is coming to an end, potentially coming to an end, and a new trend is going to start and then take off. However, the RSI, just like any other indicators, it is just an indicator at the end of the day, which means that there are times where it works, there are times where it doesn't work. It works more times than it doesn't work, but you need to understand that, look, sometimes it's going to be wrong. This is where you put contingencies in place, like stop losses. So if you enjoyed the content that I put out on the RSI, so the relative strength index, then make sure you guys subscribe and of course hit that notification bell so you don't miss any further educational uploads that I do. Thanks guys, I'll see you in the next video.